So that's where the cost basis or the buying power comes into play. The buying power reserves the maximum amount of money you would have to fork over for losing 100% of your trade. And you can't just say to the broker, hey, I don't think I'll ever really pay the maximum penalty of like messing up on the strategy, but they don't care. They're just going to withhold that just so it protects them from you ever having to owe money and they have to fork it up themselves. So, what is the maximum ranges here? We have 382 is basically break even at this particular point. Let's say 383. And then we have 452. So if you notice that as I move my mouse towards these upper ranges or these close to the break even points, they move well past that 1 month time period. And if I were to zoom out even more, where we are like even further out from all the way back to like October, where we hit some of the lowest, right? 301, or like just at the 300 level, was basically the lowest we've ever gone. And my prediction is that we will go lower than that for sure once, once something breaks and everything sort of sets in motion. But for this particular strategy, remember, it's only 38 days out, and I'm looking well past 6 months, okay? So I think having these levels is pretty much giving me enough buffer room that if it were to swing one way or another, in 38 days time, I probably have some good wiggle room. And the buying power is pretty much less than 300, and the reward is 215. Now, factoring all those variables in, that's like all a little bit less than a 1-to-1 ratio, but you can't beat that when it comes to being able to profit something for the same amount of money that you could potentially lose, right? So it's not like it's not like a 1 in 4 odds where I could only win, $1 for every $4 that I risk. It's basically close-ish or closer to a 1-to-1 ratio. And so that's what makes an Iron Condor pretty good for this type of account and pretty good for this strategy, because in 38 days, if this executes and if this pans out pretty well, if I get close to $200 collected for this strategy in 38 days, that basically means that a little bit over, a month and a week. So yeah, like a month and a week, I basically would have made 10% of the account. And then if I did that 10 more times, I would effectively made 100% ROI in 10 months for just doing an Iron Condor. And so, that's one way that I can basically get to my goal, but I will obviously look at what sort of the market gives me and then see if I can take advantage of particular movements or particular, things that I can exploit to really maximize the profit. So when the markets open up and I'm able to trade again, I think an Iron Condor with this strike range right here should suffice in terms of getting the ball rolling. And I'm only using, this is what, little less than 15% of the buying power. So effectively I could release or execute 2 of these Iron Condors and be able to really double the efficiency. I wouldn't want to do that on this small account though, because let's say if I were to execute this Iron Condor right here and like the stock price shoots to 437 on the left over here at the highest highs in just a matter of a day, then I don't want to risk the second one so quickly. Maybe I'll execute another Iron Condor that will put it somewhere smack in the middle yet again, so that way I can create kind of boxes as the stock price moves, and then hopes that I can be able to capture that window. And then, of course, there are other strategies too that are similar to an iron condor, or rather, it's a modified one, like a broken wing butterfly or jade lizard, as it's called, where I can actually manipulate the stock price one way or another so that I give myself no risk to the downside or no risk to the upside by simply making this bought put or this bought call closer to the actual price of the sold one. So it's a little tough for Soxel because they move at $5 at a time. But if I were to try to create an example, perhaps maybe it's like this. Yeah, no, it's not going to work with this particular equity. But I can show you on a different time in a different video of how you can make it so that there'll be smaller profits, but it'll be infinite on one end, on the lower end, or infinite on the other end. And you can be right or wrong in literally 2 out of 3 movements, right? You want the stock to either stay put or to go in one direction. So getting 2 out of 3 as a safety net that you always make profit is not a bad strategy. So that's another way we can go about it. But I think for now, because the market's kind of chopping sideways and it's really not going to be certain about what's going to happen next, I will use that uncertainty and really capture a wide window and just sort of milk it for the time period that is to come. So hopefully that was helpful. Hopefully you got an idea as to sort of where I'm going with. And then I will send the next follow-up video to just show you what it looks like once it executes. Take care.